What's up everybody, Michael Silva here to do some technical analysis on the price of gold. In this video we will be discussing today's large pullback over 100 points as this recording takes place. The market is still technically open. We're going to talk about these support levels and whether or not you should be buying this dip or waiting a little bit longer. Let's get into it. All right, welcome back. We are looking on the daily time frame, the price of gold in US dollars. Now in last video we recorded, we were saying, hey, right now is probably not the best time to buy. I would expect to see some type of pullback in the near future. And pretty much instantly, we saw a pullback those next 3 days. But today being an ultimate driver to the downside, 103 points to the downside. We haven't seen a day like this since 2013 where we had a single day move of $128. Now we're going to go back in the history of the chart to look at that day to see what happened after the fact to determine whether, hey, this might just be a bounce point or we might see a continuation to the downside. Now we also mapped out 3 areas of support. We mapped out 1981, 1900, and 1815. This 1981 level just fell right through the roof on it. So we're gonna go ahead and just remove that as of right now. And we're going to focus on these 2 levels, the 1900, where really the price came down and bounced right from it. Now, interestingly enough, we haven't seen a move like this since 2013, over a 100-point move. However, even with the 100-point drop, we're still trading at the 2011 market high. We're actually right there at that specific level. And what I want to do is talk about the overall context of this chart first. The overall context of this chart, if I scroll back in the history, we're looking at a couple years here. It is in bullish context. You can see the 50 period moving average is blue line above the 200 period moving average, has a nice spread, and it's moving in an upwards direction. Now when you scale out and look at gold from a longer time frame, this little move right here doesn't look as big. Now it is still a big move. A 5% move to the downside in the price of gold in a single day is a dramatic move, and we need to make sure that we pay attention to it. But what's very important about bull markets is we typically see strong one-day moves to the downside and a continuation to the upside. Bull markets typically climb a wall of worry, so it's not by any means weird to see these type of pullbacks, and that's why we discussed it in my last gold technical analysis video that we could probably see a 50% retracement at some point. Now it's a complete coincidence that it happened the very next week. I didn't think that I was going to see something move this dramatically, but it did, and at least we were prepared to see what took place. So if you are wondering whether you should be buying gold right now or, hey, sitting on the sidelines for a bigger move, that's a great question. And here's the reality of the answer. It still depends on what your plan is. Are you trading gold? Where you're going to be a short-term 3, 4, 5 weeks, maybe a couple of months? Is that your idea of buying gold? Or are you a long-term investor in the price of gold? And are you using it as a hedge against inflation for the future? Are you using it to protect your wealth? All those things you have to take into consideration, and we're going to discuss here in this video. So starting with, if you are a trader, if you trade price of gold, or if you trade the GLD, or if you trade gold mining stocks, whatever it is, from a technical analysis perspective, when you see dramatic moves like this, whether to the upside or the downside, you typically get some sort of rubber band reaction. And what I mean by that is you get one very overextended move. So if you pull the rubber band out and you let go of it, it can snap back very quickly. Now what you see here on this breakout from this 1750 level, you had a very overextended move, right? It kept on running and running and running, and then we saw that snap back very quickly here. So what we might be seeing is that same thing happening, but at even a faster speed. We see this pullback here, and we might see a snapback to the upside. Now as far as the levels of support where this is falling in at, well, right now we're trading at 1921, and 1921 is an interesting level. That was right around the market high in 2011. So even with this huge 100-point drop, 106-point drop now, we are still trading around the all-time market high from 2011. 1900 does still offer a strong area of support. That also is the 50% retracement level on the Fibonacci when we measure it from the level of the breakout in this previous channel. The question remains, are we going to see more continuation, more blood to the downside? It's possible, and the reason why I say it could be possible is simply because if you look at how far the price overextended from the 200 period moving average and the 50 period moving average, when you see price movement extend that far away from it, you can see these type of moves take place. So when I measure it out, we've had a 25% extension over the 200 period moving average. So clearly the price got away from us and we're seeing that big retracement take place. Now, a lot of people that bought gold up here, clearly they're feeling what we talked about on the previous video. We mentioned not to go in on a huge position at this very top, because what takes place is you can get trapped up there for a long period of time. So if you were a long-term holder, we said, yeah, go ahead and buy a little bit, but buy more when you see these pullbacks take place. So what would I do personally? Well, in order for you to know what I would do personally, let me tell you what type of investor I am in the price of gold. I believe that gold will hold its value over the course of 5-10 years, and I do believe that the price is going to continue to go up, especially with what the Federal Reserve is doing around the monetary policy. So I am a buyer of these specific type dips. My largest position was back here in March on this March low. I made a video about it previously when I bought in. Now in March, the price went from a high of here down to here. That was almost a 250 point move to the downside. Didn't quite close there, but it did extend about 250 points down, which is a 14% move in the price of gold. And as you can see, when we had that huge overextension, we came back up pretty quickly, consolidated, and moved even higher. So what are the levels that I'm going to be keeping an eye on? Well, still, we're going to be looking at 1900 for an area of support. The price pretty much came down to there. We may see it extend further to the downside in the futures market or potentially tomorrow, and we might even see it come back down to this 1850 level. This 1815 level does look very strong to me, all the way to 1800. We have the 50 period moving average moving up closer and closer because the price action is currently above it. So what we might see is a continuation to the downside and a bounce from the 50. Now, the only reason why I think that we might see a bounce from this point is simply because of what we talked about, the rubber band being overextended and potentially snapping back. Now let's go ahead and go to the history of the chart to get a good sense as to what happened in April when we saw a huge 100-point move to the downside. All right, so we are looking here at April 15th, 2013. Now, this is a very interesting kind of thing. It looks pretty similar to what we saw in the past, except we're at different levels, clearly. We were dropping from 1550 down to 1360, and now we are dropping from an all-time market high to basically the 2011 market high. But this day right here on April 15th, 2013, we had a 128-point drop in a single day. That was the largest, I believe, percentage point drop since the 1980s, I believe. Don't quote me on that, but I'm almost certain this kind of drop wasn't seen until like 30 years later. Pretty insane, and this might be the largest dollar drop in history. So we are seeing a very similar thing take place. And well, what really happened? Well, we saw this huge overextension to the downside. It was 2 trading days to the downside. Right now we're, I believe, on the 4th down trading day. So we saw something similar to this. And then we're seeing this really overextended move. And thereafter it moved a little bit lower and we saw a snap back to the pretty much darn near high of that specific candle. Are we going to see something similar take place? Well, it's very possible, especially given the current conditions. So we're back here now where the price of gold is currently trading. And what I mean by current conditions is we're seeing the price, this huge drop off, right? We're at down $103, down 5% for the day. We had almost a 9% drop in April 15th, and we get this overextended. We had a couple of days of selling before that. So we're seeing something very similar take place. The only difference here right now is the bounce was right around the support level we mapped out, which is right around the 50% retracement level from the breakout area. And we have another area of support right in this area. If I zoom back to the history of the chart, you would look at 2011, you would look at the market high. The market high was at 1921 right here. And you see this little thin red line going across the screen? Well, that's exactly where the price of gold is trading right now at this specific moment. So the pullback a little bit lower than this today, but now the current price action is just sitting on the all-time high from 2011. So as I mentioned, we have the 50% retracement level acting as an area of support. We have an all-time market high from 2011 acting as an area of support. And then we have this overextended move to the downside. And when we go back in history to April of 2013, the last time we saw a dramatic move like this, we saw the price of gold rise back up to around the high of that specific candle. So if that is the case and everything lines up, we have good support, we have history telling us on these overextended moves we might see a bounce. So there's a lot of good things saying, hey, this type of move might just be shaking weak hands out of the market. Now you still might be wondering, I don't know if this is a good time to buy. And if you are considering whether you should buy or whether you should not buy right now at this specific time, leads me to believe that you're unsure of how you want to go about investing or trading into gold. So right now, if you are a trader and you want to buy in to speculate that this price is going to bounce from this point, I just pointed out multiple different things as to why we might see a bounce in the near future here from this support level, the 50% retracement level. We're at all-time market high from 2011. It looks like it's bouncing just a little bit from that. And then I showed you the move in April of 2013 of what took place on these type of overextended moves. So if you were a trader and you wanted to get in right here, I could completely understand. However, and there comes with the big however, you need to have a stop loss, because this type of move, if we see a continuation to the downside, could wreck a portfolio. So if you're trading options or futures market for that matter, you need to have a stop loss and you need to be prepared for what could potentially happen in this market. A lot of people have been saying that this could be just a blow off top. We're going to see the move all the way back down to the downside. It's going to be very similar to 2011. However, with the current state of the economy and what the Federal Reserve is doing, I believe personally that that is not going to be the case. We are in a bull market, and these type of days happen in a bull market, and you'll see up days like this typically at the end of a bull market, because that's when the bull market comes to an end, when all the FOMO pushes it up even higher and higher. Now, if you're not a trader and you're a long-term investor, these opportunities present themselves very nicely for buy-ins. Now, unfortunately, we're still at the 2011 all-time market high. So this is still, even with this huge down day, the market is still very expensive right now, especially if you're buying the physical metal, because take into consideration what's going on with the pandemic, the logistics and the shipping. So the premiums are really overpriced right now in the price of gold and price of silver. So we're seeing prices that are still expensive. Me personally, I want the price of gold to fall even further so I can buy more up. I would like personally to see a retest of this channel all the way down here to the 1750 level. It'd be amazing. There's other charts that I've looked at where 1450 would be an amazing level to get in at too as well. I don't see it coming down there in the near future. It's possible, I just don't see it happening. And then another area is right here at this $1,800 level. We were talking about that on the breakout. So I would be keeping a close eye on this 50 period moving average. It makes sense that we're seeing this pullback as I stated previously. Will we see a continuation more to the downside? It's possible that we get a little bit more of an extension, but potentially a bounce from that point as well. Like I said previously, these rubber band moves sometimes snap back, and once they snap back, we might go into a level of consolidation where we just trade sideways within a range for quite some time. We're gonna watch this day by day, and I'll do as many technical analysis videos as I can on the price of gold, keep you updated. That's all I have for you on today's technical analysis video on the price of gold. See you next time.